Hey everyone, this is Dimitri Pargamonic with MarketChameleon.com. In this video, I'm going to cover how to look up the performance of an option straddle if you held it for different days of the week. And we're going to use SPY as an example here. And let's take a look on this left-hand menu. It is under Tools and right here, At the Money Straddle. So we're looking at the At the Money option straddle. Let me close this menu here. And when we come down here, we have, you could see week by week, going back around 3 months. If you held the option straddle, buying the call, buying the put from Monday to Tuesday, and this is a performance week by week, Monday to Wednesday, Monday to Thursday, Monday to Friday, Tuesday to Wednesday, Thursday, Tuesday to Thursday, and so on. And over here, you could see this would be the holding days, the number of days you held it. And for each one, you have the performance for that week. So we could come down here and take a look at the summary statistics. So we could see from Monday to Tuesday, that straddle only was profitable 27% of the time from the long side, for an average loss of 8%. So for those of you who are selling the straddle consistently in the last 3 months from Monday to Tuesday, that would have been a winner. Here's the median return, negative 15%. This is the minimum return, negative 35%. The lowest, the highest to the upside was 46%. This is the standard deviation of the returns. So if we kind of scroll down, we could spot which strategy performed the best. So here, Thursday to Friday, we could see that the straddle was a winner 64% of the time. So for whatever reason, from Thursday to Friday, that straddle tended to be either underpriced or we had some big moves. And you could see here that more winners than losers, 64% of the time, for an average return of 27% and a median return of 16%. Now that's just holding the straddle outright. If you wanted to see the data, you could click on this little view over here, click on that, and then it gives you the details for each week. What was the strike price, the time the straddle's initiated, so we wait till 10 a.m. when the market's bid-ask quotes tend to tighten up. Here were the prices when you initiated the trade. Here's when these were closed out, and these were the returns. And we do look at the straddle from 3 different perspectives. One is that you hedge, unhedged, just buying the call and buying the put. Another is that you may hedge the delta neutral. So if the stock wasn't exactly at the strike price, it had a delta. And another one is if you re-hedged the delta daily. So when the stock moved, you had a new delta by the end of the day. You hedged that delta to go out delta neutral, and you traded your gamma by re-hedging your delta every day at the end of the day. And you can go and look at those tabs separately up here. So hopefully this was helpful, everyone. Thank you for joining, and hope to see you guys in the next video.